So, hi everyone. I'm here with Catalina Luna Kisic. She's the operations manager for GPS asset management, and you're based in Peru. But you basically do MPL servicing, really across the sort of like the South American kind of market. So you're based in Peru, but obviously you do it in, Argentina, Colombia, a lot of the major markets there as well. So thanks very much for joining me. I really appreciate it.
You're welcome. I mean, happy to be here too.
So my first question was, I wanted to find out a bit about what does the collections and debt servicing landscape look like in South America? I mean, which are the larger markets? Just give us a bit of a sort of an orientation for those of us in Europe or even in North America in terms of like, what's sort of concentrated and what's kind of drives the market to a certain extent.
Yes, of course. I mean, the market is basically driven by the economic cycles that every country has had.
Yeah,
I would say historically one of the major landmarks in the debt servicing in South America was the tequila crisis in Mexico in the
yeah,
mid 90s that resulted in a very big transaction afterwards, and same in Colombia at the end of the 90s, no, that resulted in one of the biggest transactions that the people in this market can remember, no.
yeah.
Finally, well, I can add some more things about Peru. It's a servicing landscape that was mainly for unsecured accounts, but in the last 10 years, it has been picking up on the secured markets. No, we've seen many transactions since then, and it's very interesting because banks have now realized that selling the portfolios is actually part of the recovery cycle,
Mm.
and now they establish a pipeline for those sales. No,
And
um,
in terms of the markets that have the most sort of advanced sort of consumer lending kind of businesses, which ones are those? Because I know that Peru, as an example, was pretty advanced, has always been pretty advanced in terms of that sort of like that kind of the growth of the market. Mexico is obviously a huge market as well. Colombia, I think, sort of been developing. I mean, which of the markets do you consider sort of further advanced or further developed versus others? I mean, are there any in particular that you find easier to do business with, or where the banking is maybe more what we might be used to elsewhere, I suppose.
Yes, I mean, definitely Mexico and Brazil would be the most developed markets
Mm,
in terms of this business. But definitely Colombia, Peru have been catching up. No, an interesting country as well, I think, worth mentioning is Argentina. They
yeah.
used to be very active at the beginning of the 2000s, but per their economic conditions, I mean, they stopped being attractive for international
Mm,
investors that usually drive this market. But now, I mean, we're seeing this is starting to change now, so it could make an interesting comeback.
yeah, yeah. And what are you seeing in terms of, I suppose, the economically there? I mean, is it how's that been sort of developing, I suppose, recently? I mean, so like certainly in Europe, and I'm based in Europe, we sort of like seen sort of like downturns, recessions, like the impacts around things like the oil price, those kind of things. You're obviously in a completely different geography with a completely different sort of like, base economic level. I mean, you're sort of seeing like that as being like a potential uptick in terms of the whole region at the moment, because you've definitely got advantages where you are.
Yeah, I mean, there I think I can speak more. For example, minerals prices
Mm,
usually drive more our economy. For Peru and for Chile, for example, copper is a
mm,
big, it correlates really good with
mm,
GDP, and that
mm.
definitely shows how our dependency on some primary sectors is still very present, no?
Yeah.
Um,
And how does that link through to things like consumer lending, as an example? So it's the development around consumer lending and particularly unsecured versus secured. I mean, why are you seeing sort of growth in that? And is that across different sectors? I mean, you'll have different segments of the market as well, being it sort of like high-end kind of sectors where people are relatively well off, and like sort of like more of the mass market kind of sector there as well. I mean, what does the consumer lending market look like?
Yeah, again, I mean, I can speak more about Peru on this. What we've seen in the most recent years, I would say it's banks focusing more on the
Mm,
corporate sector, whereas, for example, SMEs
mm,
have been a little bit hurt,
mhm,
especially after the pandemic. They didn't really recover, and their NPL ratios have been, NPL rates have been increasing steadily ever since.
mhm,
And on the consumer side, I mean, no, consumer loans and mortgage to people, that has been growing but at a slower rate. No, it has
mm.
been growing steadily but at a slower rate. um, I think that's mainly what that's something
And
that
you
we've seen now.
Yeah, you mentioned there the pandemic, right? So a lot of us were sort of like, a lot of the world seemed to sort of change, or like stop essentially during the pandemic, especially in terms of, working practices kind of changed. It feels like it has had an economic impact. Did you see a sort of like a big spike in terms of arrears levels as a result of pandemic? That's certainly what we feared over here, and it really didn't come through. And now it's sort of recovered, and yeah, maybe it's increasing a little bit. We got economic sort of downturn or stress that's happening, but it isn't sort of spiking either. It's sort of like it was much more muted than maybe we thought, and now it feels like there's sort of underlying kind of maybe an increase that's going on. I mean, what are you seeing in your region?
Yeah, what we saw, I mean, there was a lot of economic help coming from the governments. No, they
Mm,
tried to give a they tried to ease no the spike that was going to come in the NPL ratios. So they gave a lot of help, and this didn't necessarily stopped it. No, it just
mm,
delayed it. So
hmm
2021 rather than 2020
Yeah,
was a year where we saw more of these programs ending and the NPL ratio actually coming to a sincere number.
yeah,
No, when they didn't have the help. But now what we're seeing is, well, mortgages and consumer loans, they are returning to the pre-COVID levels, maybe a little bit higher, no? But the one that hasn't really stopped growing ever since, it's SMEs. No,
hmm
it's the sector that I would say has grown the most, and where we believe actually it's the greater opportunity right now. No, we
mm,
see investors specialized in this type of sector that are making very interesting deals, no,
mm,
because this is what the banks are trying to sell the most.
yeah, yeah.
No.
And so that sounds like that sort of, again, probably a hangover from the pandemic, and then maybe some of the global issues that have been around trade and some of those kind of things that are sort of impacting the SME kind of business, resulting in, potentially more NPLs as an example, or those kind of things needing to be worked out over a longer time period. Does that kind of make sense, or is that kind of what you're seeing?
Yeah, I mean, definitely the world changed, especially for SMEs that weren't really prepared, no, for a
Yeah.
pandemic. So yeah, I mean, they have to either reinvent themselves or change the their orientation, no?
Yeah, and you guys are obviously in the debt servicing space as well. What does the collections process typically look like? I mean, from your perspective, in terms of like, how you work through the loans, but then also talk a little bit about how you get in contact with people and sort of like, what's the kind of process that you would typically go through?
Yes, in unsecure accounts, usually what we do in GPS, it's more related to getting contact with the borrowers,
Mm,
no? And for this, we use a lot of technology. Not right now, well, AI is
mm,
very trendy in that subject. I would say it's that in the unsecured world, no, the key to success, it's contactability, and there's no
mm,
secret about it, no? Everybody knows about that, and whatever helps you get more contact with the borrowers, that's where we're going.
mm,
No, we have a business intelligence unit that cares and analyzes the data. Know what's the best time to call a debtor, what type of SME has a better reception, and those sort of things. No,
mm,
in the secured world, it's a complete different story. I mean, obviously, it's important to get contact with the borrower, but you also have the legal process, the foreclosure process, to help you in the negotiation with the borrower. No, so
mhm,
we have like the two teams working in coordination, like the legal team working towards getting the foreclosure process as fast as they can, no, supervising the law firms and helping them with the courts. And then we have the extrajudicial team that has to know where the foreclosure process is at before they have a call or before they visit
mhm,
the borrower. No,
mhm,
definitely I would say first best is to visit the borrower. That's like the best type of communication you can have with them. Second best would be a phone call. And something that we're seeing more recently is that WhatsApp is one of the best ways to
mm,
communicate with the borrower, because some borrowers are stopped taking calls from unknown numbers, no, given that there's a lot of scams related to that. So you can first make an approach through WhatsApp, no, and there's a lot of companies building technology to provide that. And then schedule a meeting or schedule a visit or schedule a phone call with a borrower once you have contact, no?
Yeah, yeah. So you find, I mean, you're finding sort of like just like it's like everywhere really. I mean, it's that that messaging kind of app is becoming very prevalent. I mean, we all use it every day. And is it WhatsApp particularly that's sort of like
Yes.
that's popular in the market there? Yeah.
Yes, I would say in all Latin America, WhatsApp, it's the biggest thing now, no? It's yeah, it's that app in particular.
And how do you see it in terms of like I suppose like a blend between messaging on WhatsApp and then it's a blend, is it, with then the telephone call? So it's like initial contact, is trying to get engagement with someone, and then once you have engagement, you then speak to them on the phone. It goes back into the normal process, or
Exactly.
is that kind of what you're seeing?
Yes, that's what we're seeing. Because definitely, I mean, with borrowers, every time answering less unknown calls, we had to look for options, no, for them to understand that it was not a scam. We were
Yeah.
actually trying to help them resolve their situation, their financial situation. So it is a first contact, and then you try sit down with them in person or virtually through a phone call. No.
Yeah, yeah, yeah. And do you see any, I mean, is there a readiness there for, I suppose, self-serve kind of technology, particularly in unsecured, I suppose, which is almost like, using that through portals or those kind of things? Or is it really sort of like people have that sort of comfort level around talking with an individual? I mean, what's the, I suppose, what's the cultural bias, I suppose, that the people kind of have really, or preference that they have? Would they rather talk with
You mean,
someone, or would they rather talk with someone or solve it online?
yeah, that's interesting, really, because I think that's more, I mean, it's always better to negotiate something in person or
Mm,
through a call. It's always going to avoid any misunderstandings.
mm,
But definitely younger generations would prefer to get further into the conversation through online or email, no?
yeah.
Maybe more through text. So that's definitely something that's been changing. But when we get to the final stage of negotiation, I mean, we always prefer it to be in person, no?
Yeah, yeah. Actually, physically in person, in terms of actually visiting
Yes,
them. Yeah, yeah. I
yes,
suppose that's where you get the best kind of interaction. You can sort of see how people are
yes,
reacting to things, and those kind of you get a bit of judgment.
yes, exactly.
And are there any other, I suppose, other kind of technology? You mentioned AI right at the start. I mean, sort of, there's been a lot of buzz around that. When we were chatting before, we definitely talked about it at the previous events we were at. I mean, it feels like the world has sort of like gone AI mad to a certain extent.
Yeah.
What's your kind of view on that in terms of like how that can be adopted into the collections or the NPL world? I mean, what's your kind of thinking at the moment?
Yes, I mean, what we've seen, there's what we've been discussing regarding AI. It's been softwares that, for example, they analyze the calls and tell you more insights about when it's better to call, what was the sentiment of the borrower after you tell them this speech or this other speech, so you can
Mm,
compare your speeches and, and see which
yeah.
one is more effective. Um, but I think definitely it's more useful. Well, another big use that we've seen is audits, right? They can audit every call that we have and check that the collectors are following the script, no?
Mhm.
And do like the check boxes instead of having a person listening the calls and then making the checklist on
Mm,
their script. So, I mean, those are some very interesting uses that we've been seeing here, no, in AI. Unfortunately, for secured negotiations on the phone, since they can go everywhere,
yeah, yeah,
it's been a little bit tougher to get a better result, no, because I mean, these are phone calls that can take up to 15 minutes.
yeah,
Whereas for unsecure, it's better. No, they
yeah.
work better definitely because it's shorter calls, it's more straightforward. Like there's no foreclosure process in the middle that you have to go through. So yeah, definitely, and smaller amounts definitely. No, so I think in that sense, that's what we're seeing with our technology team. No, where AI can help. No.
Mm. And what about, I suppose, things like the modeling? Because it sounds like the one of the key challenges is like how do you get hold of people? How do you get them to engage? How do you, because once you've got them engaged on the phone, then you can obviously have that negotiation that you're into that. But it's like, how do you reach people? I mean, I mean, there are tools out there in terms of like using segmentation or modeling or additional kind of data as well to find out, what's the best contact number, but also, right, what's the best time of day? I mean, do you use those kind of things as well? I mean, how
Yes.
prevalent are those across the market, or how beneficial are they, I suppose?
Yes, no, definitely. I mean, we have an entire business intelligence unit, which obviously apart from the reporting that we have to provide our investors,
Yeah.
they look into that. No, that's exactly what they look into that to help us or help the collection team, the operations team to do their job better and more efficiently.
Yeah.
No, analyzing the data, it's more on there than on the operations team. No, that's more
Yeah.
focused on the collection side.
Yeah, and I suppose if you look at the, I suppose the competitive landscape with, within the, the debt servicing space, sort of like locally, how far advanced do you think that the market is, or what becomes the differentiator within the market that the banks are really looking for? I mean, are they looking for the new technology? Are they looking for new technologies that can sort of give you the edge, or is it really come down to financial return, and that's really what the decision making process is? Because there's a brand piece associated with new technology. Or we've got the latest technology as an example, so that's great. We're looking after the customers the best we can. Or does it really come down to net back and yield, and the financial measures is really how they're making decisions?
Well, I think it's a combination of both because whatever technology you use have to give you more return in terms of your financial
Yeah.
returns, right? So I would say it's you look at both, right? In terms, but obviously technology, using technology, it's something that we use as a selling point.
Mm.
But obviously our focus is we're gonna buy this technology because it's gonna make sense financially. It's
Yeah.
gonna
Yeah.
bring better returns, no?
Yeah.
So yeah, I would say we look at both, no?
Yeah. And regulation's been a big topic in Europe and particularly in the UK and a couple of other markets around the world, like Australia as an example. What does the regulatory landscape look like in South America? I mean, I'm not sure how familiar you are with the stuff that's happened here around affordability and the various checks we have to do. How do the regulators look to other markets? What does the regulation look like in terms of, particularly for those who are in arrears or in like the MPL process or the workout process? What does that landscape look like across, the different markets in South America?
I would say, I mean, it's very consumer oriented, no? Consumer
Mm,
protection oriented. I can speak particularly about Peru in here because that's where I'm
yeah.
more specialized. And I think something good about the regulatory environment, I mean, rather than it being very consumer focused, consumer protection focused, is that it's been very stable, no, this last
Mm,
year. So that gives a lot of predictability for the international investors we've been working with this past 10 years. So that makes it very easy to make decisions based on that.
mm,
No, we know, for example, we also have operations in Colombia, and there was a recent change a couple of years ago in the consumer protection law as well. No? So they had to make some adjustments there with their call centers, which are usually vendors. No, so yeah, I mean, I would say rather than that, it's very consumer oriented.
yeah, yeah. And I
So
suppose the
so
the question
that
the question is
push.
almost then is
Yeah.
how much does the digital process or the technology help you sort of influence in terms of like maybe mitigating some of the cost impacts you can have from consumer protection legislation, or finding additional edge in terms of segmentation that keeps the profit margins up or keeps the yield up, this even though there's potentially extra protection coming through as well, which is probably a good thing from a consumer point of view.
Yeah, I mean, definitely, but I mean, I would say the direct impact of this is that we're very focused into amicable
Mm,
resolutions, no?
yeah,
Since we know the foreclosure is gonna be favoring probably the consumer,
yeah.
no? But I mean, we have that is something that we specialize, and that's something that we have been working with all the years that we have experience here, no?
Yeah, yeah, and I suppose yeah, I mean that speaks to the investment in things like messaging and sort of like the segmentation stuff and some of the technology you've got around that sort of early stage amicable kind of collections really before you get into the legal process. And
Exactly. Yeah.
and when you're into sort of like repayment plans or you've got agreements with customers, I mean, are you finding that consumers have got the same amount of money, less money, more money? I mean, because that's another reflection of the economic environment, isn't it? I mean, they've obviously taken out a loan 2 or 3 years ago. They're now sort of in the process for whatever reason. I mean, is the environment getting easier, more difficult? I mean, what's the feedback on that?
It's interesting. I mean, 2024 was a good year across all the portfolios that we manage right now. So
Mm,
I would say it's a good moment to be invested in Latin America.
Mm.
And we have even higher expectations for 2025, no? Especially, I mean, here obviously I'm referring more to Peru, where we know, for example, that it's not going to be a political election year. We have seen, I mean, this is interesting because when you see portfolios, for example, that are 10 years old and compared to portfolios that are 1 year old, and both
Mm.
of them did really well
Mm.
in terms of collections past year, it's interesting, right? Because as you said, there were these people went to NPL in different stages of the economic cycle, and now they're able to generate cash flow to repay. No,
Mhm.
so I think that's a very good signal that we've seen this past year now in the economy. We have the best expectation for 2025, so we're modeling around that and hoping for that to come. No.
Yeah, okay, well, there's a lot of a lot of crazy things going on in 25 as well. I mean, hopefully it'll
Yeah.
hopefully it'll pan out well. And we'll we'll see a bit of a an uptick economically. It's quite interesting to see how it's obviously it's different in different regions of the world in terms of that you get different impacts. So it sounds like you've had a good couple of years, which is fantastic. And then another interesting question I wanted to ask was around, I suppose, employee management and sort of like how employees sort of different between the different areas as well. Obviously, having run sort of like large operational teams in terms of like how you motivate the teams, get the teams interested, retention rates, those kind of things. Do you see any kind of differences by market between those, or any kind of themes as well? Because AI is probably a fear for a lot of people. It's going to take work away from people, but actually, it'll probably end up resulting in people having more in-depth, complex conversations to a certain extent. I mean, any kind of themes that sort of come through when you're talking with people who've got employees?
Yes, I mean, definitely, I would say this is a business, especially on the secured side, that people want to talk with a human
Mm.
when it comes to solving their financial situation.
Mm.
No? I mean, I think AI or chatbots or robots answering phone calls work really well, maybe for first contacts or for selling points or for, I don't know, answering inquiries for
Mm.
bank, thinking about the banking sector. But when you're already in debt, already have a foreclosure process behind it, and you want to resolve your situation, your financial situation, it really comes back to a human, no
Mm.
interaction, and that's what we're seeing. No, we use the tools that the technology has brought us, as I said, for the first contact, but then from then onwards, the negotiation, we usually help ourselves with traditional
Mm.
negotiation tactics and such. No.
Do you think with AI, and particularly taking out some of the easier types of casework that's taken out, do you think it's going to result in us having, with people having basically more discretion? So the human has more discretion than necessarily the machine does in terms of the AI piece, which is much more controlled, and actually you're going to have more experts who have more discretion because you get that human interaction. So the fact that I think you're making some good decisions, so therefore I give you a bit of extra discretion that adds a bit of a bump, probably in terms of payment stick rates and those kind of things.
Mm. Yes, I mean, I don't know what's gonna happen with
Yeah.
AI, really. I don't want to make guesses because, to be honest, I mean, it's been what the progress that we've seen in 2024 has really been amazing, and I don't know if they're ever gonna get to the level of interacting with a human being. Maybe they will, and I'm gonna say something that the that becomes incorrect in like 2 years or maybe this year. But yes, I mean, definitely what we believe in and what we work out when we work out accounts, it's prioritizing, as I said before, like the human
Mm.
interaction, because they will have more discretion on what to do next. No,
Yeah.
because I mean, we solving this type of portfolios, it requires a lot of creativity, no, thinking
Yeah.
out of the box and bringing solutions to the table that will not apply to all. No, maybe some will, but we look at cases case by case. No, we have internal committees that review the cases, and they sit down, like different collectors and workout collectors. They sit down together, analyze each other cases, and discuss. Okay, this may be the best resolution to offer to this borrower who is now
Mm.
offering this. No? And could that be ever replaced by AI? Maybe. I don't
Mm.
know. I don't know right now, but yeah.
I think it's quite interesting. It comes down to almost like relatability. So a human can relate to another person in a similar situation, and humans, quite easy for humans to relate to each other. You can follow a process with the machine, but it's quite hard to relate to a machine or a machine to relate to you. So it's almost like that relatability is almost like intrinsically human to a certain
Human.
extent. So you can understand it in terms of your terms, right? And maybe that's going to be almost like that empathy is going to become a more important kind of characteristic we're going to see within staff, within our employees, right? To do a
Yes.
great job.
Definitely, definitely. But I don't know. I don't know if AI is going to develop empathy this year.
Yeah,
That's something that we don't know. But I mean, definitely that's something, the relatability, the empathy that we have with the borrowers, and the way we prioritize the speech of, hey, we're here to solve your situation.
yeah,
No,
yeah,
we have to recover this, and that's why we're doing the foreclosure process. But we are here to help you out and work out a solution for this. No,
yeah,
that's the speech. No, if a
yeah,
robot will ever be able to do that,
yeah, yeah. Or will they understand? I suppose is
will
really,
they
really,
understand?
yeah, really
Yeah,
is.
I don't know, but I mean, hopefully,
Yeah.
hopefully, I hope not too soon, but yeah.
So we talked about quite a few things, super interesting, and it's really interesting to hear it from different geographical areas as well, because a lot of the challenges are the same, right? And we always, it's very interesting how there's a lot of commonalities. But where do you see sort of the future sort of going in the next sort of like 3 to 5 years for the industry, really? I mean, what's your kind of view and sort of outlook, and what's you guys? I mean, where do you sort of see the next 3 to 5 years kind of going?
Yeah, I mean, it's an interesting question. What we see in South America, Latin America, is that it's still a very not traditional banked countries. No, for
Mm,
example, Peru has less than 40% of their credit stock represented in their GDP. So, and these ratio is higher than 100%, even 200% in developed countries, for example,
mm,
like in Europe or the US. No, so what we see is that there's still a lot of room to grow,
mm-hmm,
no, for the banking sector, and in that term and in that sense, the NPL market is going to grow as well.
mm-hmm,
No, so we see an interesting opportunity there. What we've seen, for example, in some of the largest markets here, is that the NPL servicing market is also not working with traditional banking, but also with fintechs,
mm-hmm,
no, that have had a great way of entering this. I don't want to say informal, but not part of the traditional banking system.
mm-hmm,
No,
mm-hmm,
since there is a lot of opportunity there, fintechs have found the opportunity to reach this consumers and give them a loan, which the
mm-hmm,
traditional banking wasn't able to do.
mm-hmm.
No, so the debt servicing market has to not only look into traditional banks now, but also to fintechs, no, that will
Yeah,
start generating the same amount or maybe even more. We don't know yet
yeah,
amount
yeah.
of bad debt. Yeah, I would say that in terms of what we're seeing for the future
Yeah.
of this industry.
So the fintechs are sort of like challenging the big banks, but we've got to get ready for that sort of flowing through to the whole NPL back end piece, which then speaks to the being digitally ready, having the technology, those kind of things, because you have that different kind of consumer that will be coming through, I would think.
Exactly,
Yeah.
exactly. Yes.
Well, Catalina, thanks very much for spending the time with me. I really appreciate it. It's great to get, fresh perspectives, and actually look at a lot of the similarities as well, which is it's super, super interesting. Sounds like you've had a great couple of years actually. So we'll look forward to hearing a little bit more about 2025 and sort of, how that kind of pans out. So, but I really appreciate you making the time.
No, thanks to you, Chris, and you can come to Peru anytime. You're welcome here to see it for yourself, what we've been discussing.
Okay, well, thanks very much.